crores mark. But let's move on then. Let's focus on another big stock from the auto ancillary space. That's Uno Minda. They're a big beneficiary of the mass adoption of electrification of vehicles. The company continues to see orders for the four-wheeler, lighting as well as EV products. To help us understand how things are shaping up on ground, Mr. Sunil Bora, the Group Chief Financial Officer at Uno Minda, joins us on the show. Hi, Mr. Bora. Good morning. Thanks so much for joining in. Well, give us a couple of numbers. This EV focus, how are things shaping up? Could you tell us what is the current proportion of your order book that's coming in from EVs? And how do you see EV revenues shape up from here on? And I ask this, sir, because that subsidy and FAME, has been scaled back a little bit, which led to a big price increase. Is that hurting? Do you think on ground at some point of time that will hurt your targets that you've set for EV?
Yeah, hi. So let me answer both the questions sequentially. So first is in terms of the order book specifically for EVs you asked. So from EV perspective, you know that a lot of our products are EV agnostic. In fact, almost 99% of products are EV agnostic. So we see in two parts, our existing products going into EVs and the new specifically EV products going into EV. So as we stand, our order book, when we talk of order book, it's like peak annual value based on the estimates which we get from our customers. It currently stands at around almost 1,800 to 1,900 crores a year. In terms of the split, it's broadly equally 55% EV specific and then non-EV specific, etc. So that's on the order book. In terms of the impact of subsidy, I think it's a little premature. Yes, we did see some buying impact in the last month, but it's a little premature to talk about the EV impact on inventories or the sales in terms of the subsidy impact. But if we see Uno Minda perspective, you would have seen that last quarter, the total two-wheeler volumes, EV volumes were roughly 4.5% of the total sales of the production during the last quarter. And hence, if you see our impact, so normally the way we see is we are broadly equally split into two-wheeler and passenger car segment. Specifically talking of two-wheeler segment, our revenue from the EVs was almost 8.5%. So the kind of outperformance which we have been talking, that whatever the EV segment grows, right, we will have additional delta because of our EV specific components. There are a lot of EV components which are still yet to go into production, like the motors, etc., which the plants are under construction. But if you see from last quarter perspective, from 4.5% of industry penetration, our revenue penetration is already 8.5%.
All right. But Mr. Bora, for the company on the whole, 8.5% I think is of the two-wheeler space, right? For the company on the whole, the contribution last year was low single digits, 4.5% if I got that number correct, for the entire company.
Right. That's why it's important to understand. I was trying to say that the total revenue of the company is broadly equally split. Around 47%, 46% was two-wheeler and 53% was a passenger car segment. So obviously, if you apply two-wheeler EV revenue on overall, it will be less. That's why I said it's important to see what is the two-wheeler EV revenues on the two-wheeler proportion of revenue.
Got that.
Mr. Bora, just to make it a little simpler for our viewers as well, I think it'll help if you can give us the revenue split between EV and non-EV. Both two-wheeler and passenger cars put together. And just to understand whether at all you are drawing slightly higher margins on the EV side. And if that's the case, how much do you want to grow the EV business? That will give us a sense of the margin trajectory as well.
Absolutely, Surabhi, but it's a little early to talk about margins because you know that industry is still in the growth phase. And when you set up a facility, you set up a facility for a larger plant. So you'll have interest cost, depreciation cost, etc. on the full facility, while as volumes are still ramping up. So I would say it's a little premature to talk about margins because we need to first get into stabilization phase. In terms of the second question, how much is the EV revenue versus the other non-EV revenue? So from a two-wheeler perspective, as I said, our EV revenue is roughly currently around 8.5%. And the balance is the non-EV revenue from the two-wheeler segment perspective.
Sunil, hi, good morning. It's good to speak with you.
Morning.
We had Rajiv Bajaj yesterday with us, and we put that FAME subsidy question to him. He said, well, subsidy, no subsidy, in a way, I'm paraphrasing, you can't stop the time for an idea whose time has come. The idea whose time has come. So, and this is, EV is the future. So when you say that a lot of EV specific products that Uno Minda is making is yet to go into production. So will that be, that'll be a higher margin product category as well? Could you give us some sense? And what will that grow to eventually?
So Prashant, you are right. Definitely, some of the products, like we are currently under construction phase of the plant. Specifically, if I talk of the motor for the traction motor for the two-wheeler EV, or some of the EV components like BMS, etc. Currently, we are doing from a makeshift arrangement will go into full-fledged. Plus, the volumes are also ramping up. So yes, from that perspective, the EV revenues will grow significantly. And as we said earlier, that we had sort of two sections. One was the Freevo JV, which we did. We said our peak expected revenue is around 1,500 crores in next 4 to 5 years, and we are still on track. I think by 25-26, we are expecting that revenue to come into. Plus, on top of it, we have this EV motor, which we expect another 4 to 500 crores of revenue in the similar time frame. Plus, these are the EV specific. There are some other components which are not into the joint ventures, like the Aavas or telematics, etc. So if we see EV as a whole, the revenue share is going to be much more as we move forward. Like if we see today, the two-wheeler EV revenue industry volume itself is 4%. Like as you said yesterday, Mr. Bajaj also mentioned that definitely this is a phase which is a growing phase, and we don't doubt it. That's why I said it's a little premature to comment what the subsidy impact is going to have on the EV volume. So definitely we are very bullish on the entire sector and the growth prospects. As you know, our kit value in the non-EV, which was the existing products, versus the EV, the kit value actually expand almost already 4x is already delivered, which is going to get under production or already under production. So that is the delta we are talking about when we talk of going into the two-wheeler EVs.
Okay, all right. We'll keep that EV discussion a little bit at the side. Let's understand the company on the whole. We're running a little short on time, Mr. Bora. You've always mentioned that you will outgrow the industry, I think by 1.5 times odd. What kind of industry growth are you working with?
So currently, you are putting words in my mouth. So normally we don't.
I'm trying to understand for the industry, sir. Mr. Bora, what kind of a growth? We are a quarter into this financial year. What kind of industry growth are you looking at?
So if we see currently already the segments we operate in, like two-wheeler segment, definitely we have seen a growth versus last year is already 6 to 8% higher, and pass car segment is already 13 to 15% higher compared to last year. So that's the kind of growth number we are working on for the rest of the year. And we are pretty confident that we should be able to deliver on that outperformance you just mentioned about.
All right. So 1.5 times. So industry growth blended would be how much?
So currently blended will be something around 8 to 10%. Which
all right. So 15% growth is what we should work with for this year. Will that be a fair estimate?
Our target is. Yeah. You are right.
Okay. So 15% growth at least is what we are looking at as of now. And also margin expansion. You know, there was a time when you used to do northwards of 12.5%. And as you've said, most of the input cost is the pass-through, which comes through with a lag. Do you revisit that 12% odd mark for this year, Mr. Bora?
While you will appreciate that we have been able to pass on all the price increases to our customers, I think customers have been very kind. But what it does is you are able to protect only absolute margin, not in terms of percentage. So denominator increases, numerator doesn't. So that was dilutive of almost like 0.9% on the entire group. So 12 actually becomes 11.1, and that's where currently we are. And we do expect that this margin range we should be able to continue for short to medium term.
Okay. All right, Mr. Bora, we will leave it on that note. Thank you very much for joining in and giving us a sense of the business.